We're just quickly going to look at another cash flow statement. So over here, it says that we need to prepare the ordinary share capital note. Please note that we can ask your notes in any section with any other financial statements. It doesn't have to be with the SFP. Then complete the cash flow statement as well. And then I just want to make a note here, calculate the dividend payout rate. That's an extremely easy calculation. It's just taking your dividends per share divided by your earnings per share times 100 to get a percentage. And this is going to tell me how much did I now distribute to my shareholders in dividends and how much am I retaining for future growth of my company. You obviously want to satisfy your shareholders. However, you also want to retain some of your profits because you want to expand your business. So business that has been trading for, let's say, 40 years, they are established, they just need to continue doing whatever it is that they are doing. They're not looking at making big changes. They will be the ones that will pay out a higher dividend when we look at the rate. But if you are still a startup company, you might want to retain most of your profits so that you can reinvest that into your company in order to grow your company. Right. So ordinary share capital note and then the cash flow statement. So I'm going to start with my ordinary share capital note. There, my answer book. Okay. So it says that on the 1st of March, I had 1 million shares in issue. And then in the answer book, it says that those shares were issued and I then received 13.6 million Rand for that. Then it says that an interim dividend was declared and paid. I'm not doing that now. I'm doing my ordinary share capital note. So I will just continue for now. Then on the 31st of July, 50,000 shares were repurchased from a shareholder. So remember that you may only remove from your ordinary share capital account whatever you put into that account. Just give me a moment. As you can hear, I'm still at school, right? So 50,000 shares were repurchased. You are only interested in the average share price because you must now remove the shares repurchased from your ordinary share capital because those shares are no longer issued to shareholders. The company decided to repurchase those shares. And you may only remove the average share price because that is what you included in this account. So you are going to say that there's a buyback, so minus 50,000 shares, and this is your buyback or then repurchase. So buyback of shares or shares repurchased. Shares repurchased. Please don't write both. Decide which one you want to use. I prefer the buyback of shares. So then that happened at the average share price, which means that you now need to go and calculate your average share price by taking your ordinary share capital divided by the number of shares in issue. So that's obviously an easy one, but we will show it. So it was that, right? Yes. So 13.6 million divided by 1 million shares, and that is 13 Rand 60 cents per share. And you are buying back 50,000 shares, so multiply that. Multiply the 13 Rand 60 cents by the number of shares in this buyback transaction. So you are removing 680,000. There we go. Okay. Then also additional shares issued, and these shares were issued at a price 5% lower than the share price at the beginning of the financial year. So in other words, if your average share price was 13 Rand 60 cents, they are saying that the shares that you now issue, the 400,000 shares, so additional shares issued, those were issued at 5% less than the shares previously. So it's your 13 Rand 60 cents times 95% of whatever you received for the other shares. So it's my 13 Rand 60 cents times, I'm now only asking 95% of the previous share price, times that by 400,000. So this is then the amount that I received for my new shares. There we go. Okay, so in other words, at year end, I then have, starting with my 1 million that I had in issue, minus the buyback, plus the additional shares issued, so 1.35. And then when we're looking at the ordinary share capital, started with an opening balance, then there was the buyback, so minus, plus the new shares that I issued, the amount that I received for that, and then I will just enter that. And there is my shares in issue on 28 Feb 2024. Okay, so that's the ordinary share capital note. I think I'm going to do the rest of this question for the cash flow statement in another video, just because I don't want the videos to become too long.